Hi, Sten, are you ready?
Hi, Fungai.
Hi, Sten, are you ready?
Yeah, I am. Just a second. I'm using mobile data now, so I'm trying to switch to my router because I restarted.
Okay, no worries. Let me know when you're ready.
Yeah, but you can admit people if there's anyone waiting in the lobby.
Yeah, no, we've done that.
Yeah, I know Kudawa is in the lobby. I don't see it.
No one's in the lobby.
Okay.
Hi, Fungai.
Hi, MC, how are you?
I'm all right. How are you doing?
Yeah, not bad. Trying. How's it? Kobla, how are you?
I want to say it's all right. It's all right.
Sorry?
I'm saying it's all right.
That's good. That's good. Did you have a good independence?
I did actually. It was chilled. Then on Monday it was work.
Mm-hmm. And how's your project going?
I know it's pushing. It's getting there. I think I hadn't told you, but we've now moved into the industrial areas in town.
Okay. Oh, no, that's excellent. Well done. Congratulations.
So it's a good step in the right direction. We have started engaging more players into our supply chain, and also greater prospect clients. Just focusing on just one product for now.
All right. No, that's excellent. No, that's good. I'm sure we'll pop in soon and have a look.
Hello, Fungai.
Hi, Stan. How are you?
I think if everyone is checked in now, can start. Maybe midway you can allow then maybe two minutes for me to just switch devices because my router is taking time to come back.
Okay, sure. No worries. I think let's get into it.
I hope you guys can hear me clearly.
All right, Stan, let's get into it.
Yeah, so apologies, guys. I was just having challenges with my devices here, but nonetheless, I think I managed to join. We can go straight into it. I think I don't need any introduction. I think my profile has been shared before, but maybe just a few nuggets. I'm a banker by profession. That is all I know, and that is all I do. I've worked for various banks, different capacities. Specific to this webinar or session, rather, I've done all facets of credit from in origination, approval, and admin. I actually currently sit in the Manco Credit for the bank with a mandate of up to $5 million. I'm not inviting any applications by that, but that's just a brief background of what I do. So I've got a fair amount of experience dealing with startups, SMEs. The successful ones, obviously, they will graduate into mid-tier and then corporates. And obviously, there are others that will fall by the wayside for whatever reason. But the reason why we're here is to share some of the insights relating to banking and finance, specifically for startups. I think leveraging on my experience and some of the knowledge that I've gained, I hope I'll add a lot of value to guys on the call, and obviously to see various ventures then graduate to be corporates, which I think is most of the dreams that you guys have. So in a nutshell, that's what I am. Getting into it now.
Okay. So Stan, just on that, so, I think a good starting point, thank you for the introduction. And I think I'll just take this opportunity to thank the ILO for running the Green Enterprise Mentoring Program and the Embassy of Sweden for sponsoring. So thank you for that introduction, Stan. I guess as a starting point, I'm an entrepreneur. I need a bank loan to start or to grow my business. I see big things ahead. I come to you, the bank. Mr. Manco, you have a mandate for $5 million, and we're going to take the market by storm. How can you assist me, Mr. Banker?
Thanks, Fugai. So, just a second, Fugai.
Sure. So this is all in the day of an entrepreneur in Zimbabwe. You see the connectivity challenges, the navigating this, switching between devices. And you notice most people locally have two phones, which have got two SIM cards as well. So essentially they've got access to 4 SIM cards.
So yeah, I think you're right. Now for me, switching from device, then I switch from service provider.
All in a day's work before the meeting starts.
all in a day, but I suppose those are some of the opportunities that are there for startups. Those are the gaps that are there. Guys can go in and offer a service, who knows?
Yes, very true, very true. Opportunities galore.
Yeah. So we'll look at the final side of it. Right for that.
Okay.
Yeah. Let's get on with it now. Yes. Let's you said something. You're asking.
Okay.
You can repeat the question now.
Okay, so I was saying that I'm a startup or an entrepreneur. I walk into your bank. I need a loan to start or to grow my business. I'm one of these guys who's got this excellent product. I see big things ahead. Our product is immaculate and second to none. And our initial uptake is good. We're going to take the market by storm. Mr. Banker, I need money from you. Please assist me. Where do we start?
Yeah, obviously, lending, or rather credit, as we see it, is a relationship issue. So there's a bit of understanding that is required in any relationship, and credit is no exception. If anything, in credit, we need to know a bit more than other relationships. So there's a process of knowing each other, where obviously we try and understand you, we try and understand the business, we try and understand who you are, what you are about, what value you're creating, because you would understand that what we are managing is also funds that belong to the customers, or in simple terms, funds that are called deposits. So if you want to access a loan from us, what it precisely means that we have to extend those funds to you. So in knowing you, there's a bit of assessment that is required. So one of the critical areas in my experience, particularly on SMEs and startups, is the regulatory risk that sometimes it's perceived to be a bit high. I don't think, my view is, I think it's a bit of a perception, because anyone can regularize their business. They can comply to the laws of the land. I think that is one basic thing.
So just on that, what specifics per se are we talking? Formalization in terms of a registered company, tax clearance, and at what level do you need to know and understand me?
Yeah. For our understanding from a banking perspective, really, if you are an SME, you need to be recognized. You need to be registered, right? So if it's a company, you need to be registered, and you need to be compliant through all forms of tax laws and general forms of the land, depending on the business that you do. Certain business obviously would have special compliance in terms of licensing. So we look at the area of your licensing and make sure that you're compliant, because one of the major sources of credit is non-compliance to regulatory issues. So the regulatory risk for startups is perceived to be high. And rightly so. Most of the guys will be new to something that they call business. Remember, it comes from an idea generation, and obviously prospecting to monetize that. So yeah, I think precisely you have nailed it. It's the formalization process that we look at first before we proceed with anyone.
All right. So what are some of the consequences of non-formalization, I guess, in terms of, from your perspective as a bank?
The obvious one is you might not get the loan that you want.
Yeah, that's it. Okay, let's say I slip through the cracks and I get to the very end. And obviously there are issues or gaps in terms of the formalization aspect, where, okay, let's say my company is registered, I've got my tax clearance, maybe there's some permits here and they're missing, or is there, what repercussions does that bring for you as a bank?
Yeah, I mean, for us, remember, like I said, we also have the mandate to fiduciary duty to look after the funds of our depositors. And one of the principal aspects of lending, or rather of credit creation, is responsible lending, right? Responsible lending is obviously extending credit to someone first who is compliant, and second, we need to have assessed the risk. So for us, if you happen to slip through the cracks and you don't have the documentation, the obvious thing is we'll try to regularize, but it constitutes what we call irresponsible lending. And within a bank, it's something that is obviously frowned at, and it doesn't show that you are really a good lending officer. But look, if you go back to the business as well, you won't be doing justice to the business. There's a reason why people need to register, just from the primary basis of identification. So you can't really lend to someone that you know as a rule of thumb. Yeah.
Okay. No, understood. Okay, so let's say I have my formalization in place. I have my CRR 14 memos and articles of association. I have my tax clearance. I'm good to go. I've presented my papers. What next?
Obviously, there's assessment, right? And assessment really stems from quite a number of things, depending with the appetite of the bank. But the core ones, particularly, you're looking at, we look at you as a person, the reason why you are applying for the loan. I mean, that is what is critical. Is the reason first. Obviously, for startups, usually it will be acquisition of assets, or what you call capex, depending on the business. So we look at the capital requirements of the business, right, vis-a-vis the loan that is required. Right? So one way is used in a bank to assess that is we look at financials, right? But most of the startups would have financials. They would have a lot of right? What they think the business is going to go. So we do test those financials, and they have to pass what we call in credit a reasonability test, right? Because you can feed Excel with any number and it can give you the output you expect. The reality on the ground is what we, so if you're lending, you're trying to get as much information so that you understand the business in the most realistic manner as you can. So obviously we look at that. So we look at the amount that is required vis-a-vis the need for the loan, right? Before we look at anything, that must make sense, right? In tied to that, obviously assessing the risk, we have to look at your capacity to repay. Because remember what I told you, this is banking finance. And the primary aspect of it is you have to create an asset, which is a loan, that is repaid at the end of it, so that we also pay the interest that are due to deposit. So your capacity is very, very important. I know people think that collateral is more important. We don't lend on the basis that you have security or not. We actually lend on your capacity to repay. And when we review your capacity to repay, depending on the appetite and the model, there are quite a number of things that we look at. For SMEs now, most of them, you cannot separate the character of the entrepreneur or the owner from the business. I mean, they are one in the practical aspect.
One in the same.
Yes, you're one in the same. So obviously your personality and your character as a person is also evaluated to the extent possible.
That's what I was going to ask. At how far do you take the assessment? Well, I'm fungai upenyu mupunga. How much more are you going to look at my character?
Yeah, so thanks for that. And I think that is the qualitative aspect of granting a loan. So those interviews that you do, some of the questions that have got nothing to do with the loan per se. I mean, most of the questions that sometimes, entrepreneurs find them then to be very frustrating. So those are questions people will be trying and see what sort of character from a judgmental perspective it is. Because really, if you look at granting a loan, it's an issue of judgment. It's an issue of judgment. Yeah. So it is important as well to present yourself in a manner or posture that resembles your integrity, so that people have reasonable comfort to grant the credit.
Grant the credit. Okay, makes sense. Now you touched on the aspect of numbers, reasonability. As you said, it's one thing to plug numbers into Excel and they'll spit out an output. I take it this is your cash flow forecast that you request as part of the financing requirement. Tell us more about that.
Yeah. Look, like they say, the reality of business is in the cash flow. So for SMEs, the emphasis is not really on the balance sheet because it's a startup. Besides the vision, which cannot be evaluated, there might not be much on the balance sheet. But you then see how much the potential the business has in terms of generating the cash flow. And you must also bear in mind that it is the cash flow that will repay the loan. So that is what we really focus on. So entrepreneurs that really understand their business from a cash flow perspective, they've got a greater chance. I mean, I can vouch for 90% chance of securing any loan, because when you speak to a cash flow, you're speaking to the heartbeat of the business. And anyone who can analyze cash flow statements or forecast can sort of like tell your capacity to repay from the cash flow, your cost preference, which can give insight into your character and how you're seeing the business. And it's the premise of us lending to entrepreneurs and startups is your view, or rather your orientation around business survival. Because remember, all businesses are set up for survival, right?
Yes.
Profitability comes as a bonus, but you set up your business for it to survive through time. So all those are the aspects that I've highlighted to you are most of the aspects that we look at. Collateral, not so much, because most of the brilliant ideas, they really come from entrepreneurs that, don't necessarily have the requisite collateral. And, banks prefer, they prefer real estate over anything. And you might not find a lot of startups with that. So if you are assessing credit for an SME or startup, you have to focus more on other aspects than things like your collateral and your analysis on balance sheet and stuff. So to me, over the years, I think what has been fundamental is the cash flow and the character of the borrower. I think that is what matters most.
What matters. So I guess, the reality of it is many startups or SMEs give the feedback that they are struggling or they are not getting any financing. I think not too long ago, there was a report identifying that the out of loan applications, it was something like 10%. And of all the loans distributed or given out, it was a very small percentage. Why is it? It seems like banks shy away from supporting the startups or the entrepreneurs who have got these brilliant ideas. And at the same time, the reality is in Zimbabwe, a lot of us, we're creating employment through our innovations. So the track record may not be there, but we come knocking the door to say, hey, I need financing. I want to formalize my business. Many of us have operated in using EcoCash, mobile money, for example. And now when we come to the bank, we don't get very far. And it also seems like the banks themselves don't have much interest in the space.
It's interesting to see things that way. Look, we don't necessarily see things that way. So my not to defend for anyone, but view is, so remember, a bank is a business, and banking finance is in search of a return. For me to guarantee that return from a loan, I obviously have to assess the risks that comes with that entrepreneur. So that is the basic premise. So most of the entrepreneurs, because they are startups, the issue of formality that we talked about, most of the business are not formal, right? And most of the business plans, which we tend to focus on a bit to see how that plan goes through that test of reality check test that I said. So you will find, in a way, you obviously have to look at the entrepreneur, look at the experience in the field that they want to venture into. You look at their management ties. There's this edge about scale. Most of the entrepreneurs that I've come across in my sort of like 8 years of SAP learning, they want to, they talk big numbers. They want to grow their numbers. They are not ready to take baby steps to make sure that they can take risks that they can underwrite. So when I am evaluating that, you actually see that those are the aspects that we look at. That is the reality that we tend to focus on, right? So most of the entrepreneurs do not pass that test, right? So you then have
but I'm
choice.
Seeing big things. You see, Stan, I'm seeing big things. That's why I've got big numbers. Because we're chasing, yes, in a way, it's a dream, but at the same time, we've done our study, we've put it together in a business plan, and the initial uptake has been great. Of course, I don't have a track record because I've been on mobile money platform, but I've got a customer base, so I got something there.
No, I would want to have a sort of like a slight view on that. Mobile money view, we take, we recognize that a significant amount of business flows through the mobile money, right? Never mind the risk that
that it carries.
Yes. But we do acknowledge that, and it's something that obviously is taken into consideration. But if you look at the general principle, like I've highlighted, businesses are built for survival. That's one. So we look at what do you have, what are you about, what do you sell, to who, at what price, and how sustainable is it? So that is just the reality check. So you can have a dream of you know, a million times, right? But the reality might actually say, yes, this, according to your plan, this might be your 10-year plan. But what sort of risk can you underwrite at the moment for you to get to the next step, right? Survive the business, you get to the next step. So while scale is good for business, its size is not necessarily something that over the years is actually treated startups very well.
Yes.
Challenges. And remember, there's a lot of school fees that
to be paid.
And the bank doesn't really want to pay that school fees for you.
It doesn't want to sponsor me on scholarship. To do.
It's about the quality as well that banks get. I want to differ with you. There's a sizable number that has been financed through banks. At some point, the biggest challenge with startups is the survivorship bias, right? So if you can't see an organization with what you have been presented with, you can't see beyond the organization, beyond the tenure of the loan. I'll tell you, your gut feeling is you might not lend to that customer.
Okay, no, that's fair. That's fair. So Musi, I saw you wanted to say something just before. See in our audience.
Hi. I wanted to say that okay, thanks. One thing I kind of from my end, right? I will machinery to really scale up quite a bit. But what we realize with banks, especially in Zim, it's with the several banks that are kind of at the form country, they keep that they want business to be fully operational.
So sorry guys, I'm not sure if I'm the only one, but I don't seem to really get what the speaker is saying. Maybe it's my network. I don't know if you guys can hear it.
Musi, you might have to speak louder.
Okay, can you hear me now?
I can hear you.
It's a bit better, thanks.
Okay. Let me throw my earphones. Am I clear now?
Yes.
Okay. So I was saying what I've realized with banks, it's they say that they want at least 3 years minimum of operating as a startup or as a business, running and also banking with them. Then they can consider you for financing. So I kind of think goes back to the thing that he was saying, that they want you to do your baby steps before anything else, even if, let's say, machinery makes you more faster and more efficient. Is there a way of circumventing that part, or is just have to push the 6 months, baby steps, one step at a time, so that we can qualify? Does it make sense? Does my question make sense?
Yeah, it does.
Did you hear that?
It does. I think I heard your questions. Maybe if I can repeat so that you can affirm to me that I got it correctly. You're saying, I think banks, they do insist on some form of history of your business, even if you are requesting for an acquisition of machinery which will make you better, efficient, and faster. They sort of like disregard that. Maybe if you can go, did I get you correct?
Yes, it's true what you're saying.
Okay, so no. Look, it's like I said. Remember, it depends on the appetite of the institution. and of the risk. So if you approach a bank and you are in need of a loan for CapEx purposes, you want to acquire machinery, it will make the business grow. So the analysis and the focus is actually on the machinery in terms of, one, what sort of cash flows, what is going to be the impact of the cash flow that is going to come from the machinery. Remember, if you recall what I said, for startups, in fact, even for bigger corporates, the focus is on cash flows, because most banks are cash flow lenders, right? Except those banks that offer development or finance, because what is important in a loan is your ability to repay. So if that machinery increases your capacity to repay, right, you will find that any banker who would want to lend to you. But most of the time, you would find the issue of scaling that I said to you. So guys want to go to a machinery that obviously improves their operating efficiencies, right? So instead of producing 10 cups, you are producing maybe 1,000 cups. But when I look at the market and the demand that is available for those cups, maybe they're just 5 cups, if I can use that as an example. So that will obviously work as a negative to you when I'm reviewing. So your capacity should be, it should be commensurate to the demand in the market that is available. And the management structure that you display as well as an entrepreneur, that you can also sustain that size. That is one thing that is obviously important by a lot of entrepreneurs. You'll find most of the time it's a one-man band. They obviously they have the vision. They must grow to then look for the expertise to manage the size. Because scale comes with a problem of sustainability. You need to sustain the scale. So if I look at that, one, if the machinery adds to your cash flow, that's a plus for you, because what I'm looking at is your capacity to repay, right? But your capacity to repay is when you go to the market with your product. So there must be an appetite from the market. So we cannot, a vision is good, and I presume the vision is solving a need, right? So the need should be apparent in the market. So if the market is there, I would definitely lend to you. I don't know about other banks, but I would definitely lend to you. But you see, those, if you tie them up, right? Your request for machinery, your capacity to repay, which is tied to your market, right? And you as an entrepreneur, what sort of structures have you put in place to sustain that? So I don't know if I responded well.
Okay, I do get what you're saying and the sense behind it and the reason they need. I'll say it's similar to what we are now working on, the strategy that we ended up devising and working on, because our initial product, for it to make sense, it's about scale, right? Because it's roof tiles, and we made a formula where we're doing them manually, and it's not really sustainable. So what we then did, we revisited, reevaluated, and tweaked our original business idea to focus on things that were easier for us to make. But because of that whole premise, when we were told that, it kind of discouraged us, because we dealt a lot of transactions in people paying us directly in US dollars for the product. And there was the problem of, if we take to the bank, getting the US dollars out became a bit of what? It was a challenge. So we then just slowed down on us building on the banking side on that, because of accessibility of finances. Only just recent, I think it's, they say where the banks then review that companies can now withdraw a significant amount of money for operations and stuff. So
sorry guys, I seem to have lost.
Okay. Yeah, I think we've lost him, C, but I can get the gist of where he's getting.
No, he's back now, I think. I can see.
How long was I out for?
Just a few seconds. Just a few seconds. We
just
go
a few
to where now the banks are allowing you to withdraw significant amounts of money. So yeah, you can pick up from there.
Okay. So I get what you're saying. So I guess maybe we'll then just push the next 6 months, 6 to 8 months, and then we then come again and try.
Yeah. So I think you've mentioned two fundamental issues which are very, they're very key and very important, and it has actually affected business in the couple of years back, where there are certain limitations that were there. I mean, people will not freely bank their proceeds because of the limitations, and the economy was also going informal. I mean, that is quite important. But what you need to understand, though, within that circumstance, I mean, it's a challenge that informal business, right? So,
hi, Nicole. Understand, just hold. Hi, Nicole. Would you kindly put your mic on mute? Hello? Okay, you can go ahead, Sten.
Yeah, no, I was just saying, look, at the two fundamental issues that Mzi raised, the informal aspects of the business and trying to access formal funds. Look, I think at some point, every business was facing that. It's a challenge that we do acknowledge, and yes, you're right. It was difficult for most of the informal business, and sometimes even formal business, to bank their proceeds because of some of the limitations that will cripple their operation. But however, when you work on your entity, right, and I'm sure in your plans at some point, you really knew that you wanted to leverage your business at some point, like you want to borrow money. So if you want to borrow money, the suggestion that I can give to you is you can start on working the relationship, right? You need to develop a relationship with your bank. And I can be very honest with you. We can do all the analysis that we can torture your numbers all we can. They can give us the results that we want. But the decision to lend is a gut feeling, right? So that's why it is important for you to create that relationship. Not sure about your peculiar circumstance, but if you are in a business, you want to acquire machinery, for instance, to produce roof tiles, maybe more and at an optimized cost that is maybe cheaper. Right? So what I would look at, because I'll presume a startup is a fairly new business, right? But there are certain businesses that will obviously remain as startups, but a business will go through phases. So if I look at that, I look at the viability. Remember my comment earlier. I said the premise of business, as we understand it in banking, is businesses are built for survival. So if you come with your product, I review your product, I review the market, I see you're producing roof tiles. I also look at your competition and the advantages that you are going to create. And obviously, my expectation is, if entrepreneurs, because they don't have bureaucratic structures, so they're very agile. Movement to market, swift price. I do not believe that any entrepreneur can go and compete into the market on the basis of price, right? Because you've got significantly bigger players who have invested over the years, by the way, in machinery that maybe is out of reach for you. So what do we really look at? We look at survival and sustainability of the market that you want to service, right? And look at some of the comparative advantages for your business to survive, right? And there are specialist machinery that the banks obviously would want to, they will frown at for asset financing, for the reason that there is no aftermarket in cases of default. So if you look at that machinery, then you have to focus more on testing the cash flows, on sustainability. And are they real in the marketplace? How is the competition doing? How do you fare against competition? Do you have structures and the capacity to sustain the competition? I can tell you, if you are an entrepreneur and you're competing on the basis of price as your differentiator, you are highly likely not to be granted the loan because of your survivorship bias. Remember, we said entrepreneurs, SMEs, startups, if you profile them, they've got a problem of surviving over a long time. So sometimes, back to your question, to say if bankers then ask for you to say, look, I want to see your history. They want to see how you have fared over time, how you have survived. And like they say, you have to put your skin in the game as well. You don't want to leverage your business 100%. Otherwise, it's my business, right? So those are some of the aspects they look at. But if you look at the machinery that you buy, if it's specialist machinery, a lot of banks will then focus on your cash flow because they know there's no aftermarket for that machine. So I would, as a strategy, you rather diversify and operate on a niche, secure your market. Then if I test that, I can see maybe better chances of surviving. I think that would be my.
All right, so Sten, just on that, you touched on two things that I want you to expand on. So you touched on aftermarket as well as building a relationship. Well, let's start off with building a relationship. How do I build that relationship?
I mean, look, thanks, Fungai. I think that is very critical. So relationship is a give and take, right? Like any other relationship. So sometimes it might, if I can use Muzi's issue as an example, it didn't make sense for him to bank whatever proceeds they were getting in dollars. And it then takes a relationship for their bankers to know, even if the account is not recording any turnover or significantly low turnover, the business has got cash flows, right? So when Muzi prepares a cash flow statement, I can tell from the cash flow statement that this business is cash rich. They've got the cash. It might not necessarily be with me, but they have it. But it takes that know your customer concept for me to understand that, no, I can see low turnover in the business from the account because the proceeds are not coming through the account. But the way I understand my customer is such that I know for sure that they are getting US dollar sales, and this is the cash flow that signifies that. And it's an easy way to test that.
Okay, so are we saying that I come and open an account and, back in the day, customers could walk in and see the branch manager.
Yeah.
This is going back quite a while ago now. Now we see iPads in your lobbies. So how do I go about, I've just come, I've got my brilliant idea and it's picking up. Now I'm saying, okay, let me go and build that relationship. Do I walk in and ask for the branch manager? Who do I talk to? Because now your banks are becoming very scary to walk into to start off with.
No, but Fungai and guys on the call, we thought people are, they're very comfortable with mobile devices than they do with human faces. But however, I think the human interaction is still very key for most banks. In fact, it's going to be still key for advisory services. So branches, most of the branches like you see will be used for advisory services. So yes, you can walk into the branch, you've got an option. You can go and book an appointment or do whatever you want to do on the device, but it is still within your rights to ask to see any representative of the bank who can deal with whatever issue that you have. So that human interaction is still there. And in my take, I think it's going to be driving the bank customer relationship for many years to come. I don't believe that iPads will replace the comfort of that human interaction and the trust that is created on that.
Okay. So you're saying I can walk in and then say, hey, I'm looking to get a loan. I don't have an account with you. Can you assist me with KYC? What do I need to prepare in order to apply for a loan?
Precisely, Fungai. And you find, because SME area is an area of focus for Africa and specifically for the country. So most banks, they actually have sections that are designated for SMEs. So if your issue is a startup or SME, you can definitely get assistance in that aspect. And if you look at most banks, they've developed what we call innovation hubs to try and assist SMEs to formalize and give them access to certain resources that they might not have access otherwise. So look, I think the acknowledgement of the role of SMEs and the importance is there. And you can see all banks, you've got a specific section that specifically look at SMEs needs because of its peculiarities.
Okay, no, excellent. No, thank you for that. So I think everyone can hear for themselves. Go to your bank, ask to see someone to assist you. Now, moving back to aftermarket. So you were saying that we'll look at equipment that wants to be purchased. And one of the things to look at is its aftermarket sales. I assume this is in the event that someone has failed to service a loan and we are foreclosing the business. The bank wants to be sure that it can recoup some or all or more of its money.
Yeah. So if you look at, remember I said the best way to finance a startup because of lack of a balance sheet is you then have to collateralize the machine that you are financing, which in certain instances then the asset itself becomes the collateral. So in the event of default, they obviously want to foreclose on the asset. Yeah. So there is specialist machinery where there may not be any aftermarket. So if I'm valuing that asset, obviously those are some of the things that I look at. Yeah.
Okay.
Yeah.
Yep.
So that is
okay.
So if you've got machinery that can be generally absorbed in the market without significant loss of value, your chances of actually getting a loan on the strength of the collateralized asset is they're higher. They're higher.
Okay.
Yeah.
All right. No, understood. All right. So I formalized my business. I've come to the bank, have a look. Here's my cash flows. Yeah. You've applied your reality test on it. Perhaps I don't pass. You touched on it a bit before, but I've got collateral, whether it be in the form of personal assets of my own that I pledge, or I've got family, friends, or others that are willing to pledge that believe in my idea or in my vision. Where does that come in? And does that give me extra brownie points in terms of getting the financing I'm after?
No, not really. Remember, we said banks are cash flow lenders, so they lend on the basis of a sound proposal, and what they look at is most importantly is your capacity to repay, not the strength of your collateral. Remember, collateral only comes in when we are foreclosing. So the strength of your collateral. When we're now looking at collateral, it means you have passed all the tests. Now we are looking at in the event that
event that you fail. Okay.
Yes.
All right.
What collateral do we have? What form position do we have? So look, you mentioned another aspect of if you've got friends that believe in your idea, and I'll tell you, social financing is also a key thing, right? And it has helped a lot. If they believe in your idea, they should be able to assist you with the cash flow that you require, right? And for us, it will be irresponsible lending to lend to an entrepreneur on the strength of their collateral. We actually lend the capacity to repay and the comfort that you derive from the plan that you are presented with, because most of them, they don't have significant history. You are looking at their cash flow projection. So we do lend on the strength of the projected cash flow.
Okay, all right. No, that's great. I'll take this time for anyone in the audience to pose questions or make comments, contributions to the discussion before we continue.
And Fungai, whilst the team is preparing the questions, so one thing that I forgot to mention to you is the biggest role of bankers is to provide you with advice. So in the case that you presented that, look, you might not have the strength of the financials and the projection, but you've got, say for instance, you've got a property where the bank can register a bond, or you've got a friend that so believes in your idea and they can give you a surety bond where we can then register that property for a bond. If I strongly feel that you do not have capacity to repay, it is not, the banks are not keen on foreclosing, because foreclosing signifies a relationship that has gone south. So we will advise you to look for alternative sources of funds. We will not lend to you on the strength of your security. That's a responsible bank. I cannot lend with you knowing that you're going to fail tomorrow and I'm going to foreclose your assets. That is that if I do that, it's a bit irresponsible on my part. I have to advise you, obviously guided by the cash flow that you have presented.
Okay. So you want to remain my friend? Is that what you're saying?
Yeah, money always realizes value when spent amongst friends.
Yes.
Yeah. If you know, we won't certainly be friends when I'm foreclosing you. And you know, our structures in a bank are like, you will not see the person that has lent to you when we are foreclosing. They are actually that are employed to do that. So that relationship might actually be lost along the way. And that is what is key in any lending or banking relationship.
No, very true. No, excellent. Thank you for those insights, because I guess these are some of the things that we as customers and potential borrowers don't get to see what happens, or even having some understanding in terms of what you look at in assessing. We just see the result, which is usually no, without clear understanding. But as I said, anyone from the audience would like to ask a question? Or comments?
So Fungai, whilst the guys are also preparing, so I want to touch on the importance of that relationship again. So
I have a question.
Yes, please go ahead. Please go ahead.
Okay. Quick question. Now, this is on. I come in. How long is a grace period for a relationship building? Let's say, as you said, go to a bank. This is where to be, and are they then able to? What's the grace period that, look, if I'm able to achieve this goal, right, as a business, are you able to, you guys, what you inject so that what I push my scale to this level and to this level? If I go in straight to the bank with a detailed plan, what's the time frame that I can work with to build that relationship with them, that they say, okay, look, there's progress in this company. These are the sales, this is the turnover, this is their rate on their return on investment, and stuff. With the banking, the cash flow that I'll be producing, that I'll be depositing through deposits and cycle through banks, because I understand that with banks, it's money in, money out. That's where the relationship is.
Thanks. If I get you well, you're asking how long should the relationship go for before a bank is comfortable maybe to lend to you? Is that correct? Hello?
Yes. Hello. Yes, it is correct. It is correct. How long they're willing to lend to me?
Okay, so look, I cannot be prescriptive to that. It just depends on the amount of information that is available or to sort of like sustain the request, the loan request that is there. The standard usually for most banks is 90 days. It actually comes on the basis that most businesses, their cash conversion cycle. Sorry, I think there's a lot of feedback. Hello?
Oh, sorry.
Hello?
Oh, sorry, it's me. I'm the one. I can hear you.
Oh, okay. No, it's fine. I think there was a lot of feedback. So if you guys can put your mic on mute. So I was saying, look, we can't be prescriptive to say the relationship should go this long, right? But usually what banks do, they ask for 3 months from the mere reason that most businesses have got a cash conversion cycle that is less than 90 days. If your business has got a cash conversion cycle that is more than 90 days, it also then brings in another set of risks, right? So most startups, entrepreneurs, your cash conversion cycles are actually within 90 days. So they believe within 90 days, which is 3 months, they would have seen, I mean, a fair amount of what your business is about and the cash flows that you're getting. So yeah, but look, we do have instances where the relationship only was for a month, and we understood the business and where the gaps are. We advise the customer that the loan that you want is not actually the best loan for you. Maybe you just need a working capital. You can defer this. You know, it's like I said, it's a relationship, and our key role is to advise. So most banks, I'm sure you know, they ask for 3 months for the reason that I've highlighted. It has to do with the cash conversion cycle.
I hope that answers your question.
Yes, it does. It does. It does. Thank you.
All right, excellent. Any other questions or comments? All right, so Stan, just to continue on, you mentioned survivorship risk. Now, obviously, you know, 2020 was a difficult year with COVID coming into play. The economy was already a challenge. Fair to say 2021, the drum beats on, it rolls on. Now, that survivorship bias you're talking about, what would be your prognosis in terms of, or your assessment of what's ahead? And what can SMEs do to cushion themselves, particularly when it comes to managing their finances?
Thanks, Fungai. I think you brought in another dimension of 2020, which obviously a lot of businesses were not spared. I mean, the issue with the pandemic, it can actually bring a good operating environment. It depends on how you interpret it, on how you then tweak your strategy around it. So obviously, it challenged a lot of surviving aspects of so many businesses, and some of the businesses, no doubt, they have folded. No, not because of a problem of their own, but all the same, they folded. So the biggest issue is around understanding the market, understanding the business, and leveraging on the relationship that I've highlighted to you. So if you recall, even governments were, and the central bank, for instance, it has actually pushed for concessionary engagements with customers in relation to the loans that they already have, or certain strategic issues that were strategic to the country to be financed, like your PPEs, right? So for 2020, 2020 in particular, if you've got a strong relationship with your bank, you would know that there were concessions that were there. There were your installments where we actually give you moratorium, sometimes at 0 interest, right? Which at some point is at a loss to the bank, but it will sustain the business, the relationship, and obviously it will lead to a successful country. So we need businesses even after the pandemic. So most banks were really supporting their customers. The issue was, it was more to do with the relationship, the basic understanding of the business by both the customer and the bank, and the proactiveness of the customer to say, hold on, my business is affected this way. I don't have cash flows to sustain this loan repayment. My debt cover ratio has gone bad because I'm not selling what I used to sell because of COVID. So you'll find most of the loans were restructured and most of the loans were granted on concessionary rates because everyone acknowledged the impact of COVID. So what is important is to have that closeness and relationship with your bankers, because you know, they get to tell you, some banks actually have got access to global funds that supports SMEs. Yeah, but if you don't have the relationship with your bankers and they don't understand the intricacies of your business, you might not get to know about it. So I think those banks, those customers that kept a very close relationship with their bankers, you'll find they were assisted beyond measure, and some of the businesses are there now.
Okay. No, and I think that's fair. And I guess what it comes down to is the initiative of the customer to approach the bank. If you keep quiet and not reach out, chances are they are not going to know or fully understand your circumstances. So the initiative lies with the customer.
I mean, precisely, you're right. If I were to take Musi's as an example, they were cashing in a lot of US dollars and they were stashing them somewhere. If I don't get to know that they are affected by COVID, I don't have a way of really reaching out to them as a bank. But if they keep a closer, relationship with me, I know the business, I understand the business, I might actually advise them to say, this is the help that we can provide, and this is the advice that I'm. So it is important to keep that relationship going.
Okay. No, excellent. Thank you for that. Any prognosis of what's ahead to 2021 from an economy and COVID perspective?
I mean, your guess is as good as mine.
I don't guess.
I think we're not yet out of the woods in terms of COVID. From a monetary perspective, the government is keeping a very tight monetary policy. So you might actually see a lot of businesses struggle in terms of liquidity because their intention is to keep interest rates, the FX rates, and general prices down, right? So you must actually plan around how you're going to, you must actually plan on how you're going to access liquidity. If possible, you need to start the engagements now so that you also then create that expectation from your bankers. But generally, I think third quarter, fourth quarter, there will be very tight liquidity. So you must have access to your liquidity pool if your business has got a high liquidity need. You might actually need and the market is slowly picking up as we're opening up. You must just be careful on trying to scale up your business, particularly if you don't see the market, because aggregate demand is going to come down because of liquidity issues that I've explained to you. I mean, civil servants have been given only 25% against a possible runaway inflation that is in the 3 digits. So you can see the sort of like posture that government is saying. Look, on the FX inflows, we were expecting to see quite an influx because of the tobacco season, and it's not really sifting through as yet. So we are yet to to see it. If it doesn't come through, it will put a lot of pressure on the exchange rate. So you might actually see the official exchange rate increasing by double digits. I mean, now it has just moved from around 82 to 84, which is about 2,000 pips. You might actually see it, you might actually witness a lot of transactions now going out to the informal market again because of the attractive, because we do believe that there is a significant unwarranted control on the exchange rate to be pegged at what it is now. We don't think it reflects the value fundamentals. So yeah, so I think plan around liquidity, plan around the scarcity of foreign currency if your business then requires to import certain things, and yeah, try and be very close to your market, because aggregate demand is expected to come down because of the liquidity issue that I have highlighted.
No, excellent. Thank you very much for that, Mr. Stanley Guara. I guess as we come towards an end, any comments, additions from the audience?
Thank you for this. It's a great insight that has really been helpful, especially, I don't know, for us, for us, actually, this was a very good web attended. It's guiding me the right direction for the greater vision of the business.
Thank you for that, MC.
Thank you.
I guess
thank you very much.
I guess we come to an end for our webinar. Thank you, Mr. Stan. Very insightful. And I think you'll find we'll obviously share this video with the other mentees and mentors. And I think, the insights you've highlighted shed light in regards to pointing people in the right direction. Unfortunately, a lot of things are based on speculation. One person's experience becomes 1,000 people's experience. And sometimes we make decisions from an uninformed point. But as you said, the initiative comes with the individuals reaching out to the banks. It's true that most banks do have an SME corner or a startup hub or innovation hubs, which seem to be very popular at the moment. So we need to take that initiative and build those relationships. Mr. Guara, any parting comments or tips?
Thanks a lot for having me, guys, and apologies again for the delay on the start time. But yeah, I think what you just need to look out for is just be realistic on the business and take baby steps. I think banks will definitely are in the position to support you. Thanks very much.
Thank you so much, Mr. Guara. I'll take this opportunity to thank the ILO as well for running the Green Enterprise Program, the mentoring and the competition itself, and also the Embassy of Sweden for supporting the program. And also like to thank everyone who's attended. It's the audience that make these webinars great. So great contributions. And once more to our guests, thank you so much. I'm sure we'll have you back again following the discussion we've had. We'll put together some additional questions and we'll bring them forward to you and hopefully have you back as a guest again to shed more insights. So thank you so much for your time, Mr. Guara.
Thanks a lot, guys. Thanks a lot.
Can I say one thing?
Sure, go ahead. Yeah, sure. Go for it.
Mr. Guara, are we contact you also, for vice here and there?
So sorry, say that again.
I'm saying, are we able to keep contact with you so that you can also help us as we are trying to build relationships with the banks and point us there and then direction?
Sure. Look, I'm happy to assist where I can. So I think Mr. Mpunga can share my contact details. I'm usually more available during weekends. Yeah, so look, I'm happy to do it.
Thank you.
Yep. Now, we'll share Mr. Guara's contact details on the group, which I'm sure I'm seeing you on. So everyone will have access to those details. And yeah, take it up, guys.
Yeah, I'm also happy to take any questions that you guys didn't want to ask on this webinar, or any questions that might actually come. I'm happy to offer any advice where I can. So thank you very much.
Oh, that brings us to an end. Thank you so much, everyone. Have a wonderful evening for those here in Zimbabwe. And we look forward to catching up in the next webinar. Those details will be shared soon. Go well, stay safe. COVID is real. I hope you've been vaccinated. If you haven't, think about it. It's obviously a personal decision, but one to be not to be taken lightly. But I think in the interest of everyone, I've been vaccinated. So I strongly encourage everyone. Thank you so much, and look after yourselves. Cheers, guys.
Thank you, and bye for now.
Thank you.